Each Bitcoin is a block. It's a place in cyberspace where a billion people will be living in 5 years, and where one day everybody on Earth is going to want to own property in cyberspace. You could have 7 billion people owning a little piece of this Manhattan in cyberspace. Here's how I think you should think of it. Commercial real estate, stocks, and bonds are all valued based upon the discounted value of their future cash flows. And so in an environment where the cost of capital, or the risk-free cost of capital, which is the same as the monetary expansion rate or inflation rate, when that number is 15%, then all of those cash flows collapse, and commercial real estate stocks and bonds aren't going to hold value. And so the only real estate that it makes sense to buy in an inflationary environment is trophy real estate that has a value and use to you personally. If you're going to buy your beachfront cottage, then yeah, because you can live in it for 30 years.
Because you like it.
And if I print 1 billion times more money, your beachfront cottage works. The problem with commercial real estate is there's a CPI cap in the lease. And so if you're buying real estate for its rents, you're going to get destroyed. Mm-hmm. Now, the way to think about Bitcoin is like Manhattan in cyberspace, constructed of 21 million city blocks. Each Bitcoin is a block. It's a place in cyberspace where 1 billion people will be living in 5 years, and where one day everybody on Earth is going to want to own property in cyberspace. You could have 7 billion people owning a little piece of this Manhattan in cyberspace. It'll go on for 1,000 years. There's no reason to ever impair the asset because there's no mayor, right? If there's property tax in California, you're moving your Bitcoin to Wyoming. If there's property tax in Wyoming, you move your Bitcoin to Switzerland. So really, the ultimate property is property that 1 billion people will live in cyberspace that you can then finance. So the best idea is buy $1 million worth of property in cyberspace. And when you want $50,000, borrow the $50,000 at a 3 or 5% loan, a securitized loan secured against the Bitcoin. And then if Bitcoin is appreciating in value at 20, 30% a year, or even 10 or even 5, then the loan to value is going to fall over time. Your debt to equity is going to fall. And you can roll over that loan and finance it forever without impairment. And of course, the highest value property would be property that you can get a bid on market to market every second of the day, everywhere on Earth. So Bitcoin is the pristine collateral of the 21st century. It makes sense for everyone to use that as their primary collateral against their underlying loans. And it should obliterate the credit card business or the consumer loan business. Yeah, I think the most important point here is that conventional treasury strategies are broken. They're financially, intellectually, morally bankrupt. Like if I roll the clock back a decade, if the cost of capital was 7% and sovereign debt would yield me 3 or 4%, I could invest in that and get a negative real yield of 3%. And that means that over the course of 25 years or something, I lose half my purchasing power. So I'm holding my treasury for about a half-life of 20 to 25 years. When we got to the point where the cost of capital was 7% and the treasury yields are 0, now the half-life of your treasury is 10 years. But in March, the cost of capital went to 25% and treasuries and the yield went to 0. And now the negative real yield is 25%. And that means you're losing half your treasury in 3 years. And so at this point, you're looking at a negative real yield of 25%. And you got to plug in what you think will happen over the next decade. What's the money supply expansion rate? But if you plug in 15%, you can see that you can't keep up with the cost of capital. And if your choice is either you leverage up the company, short the dollar, and then you give all the capital back and you buy back your shares in order to leverage up your cash flows. And the problem with that is you're billions of dollars toward insolvency. You literally give up all your capital, you decapitalize, and then you take on billions in liabilities. running on a razor thin margin, trying to hold value in the stock. And that's what creates all this rippling chain of bankruptcies that you saw in the last decade, like Toys R Us and the like. The other alternative is you actually buy a hard, strong asset, which is Bitcoin. And instead of actually buying your stock back, you buy Bitcoin. And Bitcoin goes up 400% this year. If it goes up 200% a year, if you took $1 billion, you would end up with $10 billion in capital over the course of a few years, instead of giving $1 billion back to the shareholders and having a nickel in capital.
Right.
And that's really critical right now, because the surrogate for cost of capital, if you want to look at one, is the S&P 500 index, which is 25.4% in the last 12 months. If you're not getting a 25% yield as an investor, then, you know, anybody else could outdo you in 30 seconds by putting it into the SPY.
Right.
And so if you're a fiduciary and you're holding billions of dollars of somebody else's money and you're investing it at zero, right? That's a big problem. You're burning 25% a year of the capital, right? And there are problems, technical problems with corporate treasuries investing in equity because they're securities. Whereas Bitcoin is property and it doesn't have that technical problem.
Okay.
It's beneficial to have property. Bitcoin can be a surrogate for a sovereign debt, whereas equity can't be. I think it's spreading everywhere in the world. And it's spreading rapidly through private enterprises, but they don't announce publicly that they have it. So it's hard to track that at the corporate level. At the individual level, though, you can see it's spreading especially fast in countries where the currencies are collapsing, like Venezuela and Argentina and Nigeria, and places where they don't have a stable banking system and they don't have a stable currency. For them, it's a matter of life and death.
I agree.
But I think the Bitcoin is 1,000 times more secure than the next crypto asset network. And I think Bitcoin is 1,000 times more secure than every other digital network. I mean, you've seen like Twitter got hacked last year. They took over the president of the United States Twitter account. So to the extent that I feel that all these concerns are really red herrings for an investor, because if you're an investor, your choice is to invest in Google or Apple or Amazon, and those are 1,000,000 times easier to hack. Right? I mean, all the non-decentralized, non-crypto networks actually have much simpler points of failure. We just saw with SolarWinds, a simple intern password hacked into the DoD system. So, you know, you want to Dr. Strangelove scenarios, like someone hacks into Twitter, has the president declare war on China, and someone hacks in the DoD system, you know, and launches emails telling people to do something. Well, that's 1,000,000 times easier than breaking Bitcoin.
Okay.
Right. So I'm not really concerned about Bitcoin. I think that everything else on Earth is more at risk in the event of a malefactor, but we seem to be doing okay.
Okay.